Hey everyone, my name is Adia and here's my colleague Ivan. We're from Platinum Fund, as you may know. So we're excited to welcome our guests. We have Joshua Hale, who is a Californian Ohio licensed attorney and technologist, also crypto expert. And we have Arkadiy Baltser, co-founder and CEO of Prospify. And we have Alberto Cuculachi, DeFi and crypto content creator and influencer. Welcome everyone and thanks for joining. So let's start our discussion, and I would like to start with my first question. Can each of you share your perspective on the most exciting development in AI and blockchain funding over the past year? And let's start with Josh, please.
In AI and blockchain funding, I think the most interesting thing from my point of view is that we are now seeing companies take advantage of some government grants and AI, which ultimately is also leading to some government grants being done for blockchain, even though that may not be the intent. It is, the end, the analysis there, which is kind of cool. By and large, governments have been kind of opposed to blockchain technology. So the fact that blockchain technology is starting to see some grants, even if it's being done for other purposes, is really pretty groundbreaking. And, the key word being grant rather than loan, which is pretty exciting.
All right. Thank you, Josh. Arkadiy, what do you think?
I think generally this charm is slowly blowing off. The charm of novelty, and there's so much money going in and we're all excited, is kind of blowing off what investors want to see right now. And this has been the case for Web3 for quite some time now. Even though it is quite difficult to make it the case for Web3, for AI it's becoming such right now. Investors want to see pre-product revenue. It's gonna be difficult to raise money without that pre-product revenue, that pre-product market fit at this day and age.
Okay, Alberto?
Well, I would say that almost saved the market when it comes to raising funds, because in the 2023, mainly the market was pretty stagnant, but the only niche that has been pushing a lot has been AI. And literally from the moment when ChatGPT came out and shown how this technology, that it was still there, it was already there, because at the end of the story, it's not it came from zero, from scratch, just in a couple of days. It was something that many people were already working for many years into the industry. But finally, the fact that we had a demonstration, a product market fit, call it as you want, but the fact that many people was on board into the AI space, we are talking about hundreds of millions just in a couple of weeks, demonstrated and showed that kind of traction that VCs and so on were looking at. And when it comes to blockchain, at the end of the story, for blockchain, when it comes to fundraising, the last year wasn't so great. And what we have seen, this is something good and also bad from the other side, is that many projects took like a shift from their original focus to something that was more AI related. Maybe sometimes just a matter of communication. In other times, it's something that you had an idea, but you were missing some kind of a tech fundamental that maybe was missing at that time. And with AI, ChatGPT, APIs, and so on, that's something that become possible to be used. And many projects literally get the kind of boost that they were looking for in order to start growing and collecting money.
All right. Based on your answers, how do you think these developments are reshaping the investor-startup relationship in the Web3 ecosystem? Josh, let's start from you again.
As I believe Arkadiy said, the idea of grant money coming in on projects is, for many investors, a way that they can look at type of revenue that is happening, pre-investor dollars. It may not be ideal because it's not, sales, but it is a type of revenue that they're able to put on the books that shows that somebody else believed in their project enough, whatever it is, in order to, put their money where their mouth was. And that is something that is ultimately, as Arkadiy said, the direction of the market right now is, without some of the market fit, you're not going to see a lot of the investors have the same interest level as you did, what, 2.5, 3 years ago? 2 years ago, the wheels fell off. Now we're seeing people, put the wheels back on in a new, different way.
Right. Thank you very much. Everything I said really applies to early stage funding, because the kind of the scenario we're seeing in later stage funding is even more gruesome and less promising. It's difficult to raise Series A. It's extremely difficult to raise Series Bs. The sort of traction investors are looking for is crazy. We see valuations being cut virtually in halves. It's difficult. It's difficult time for the startup industry altogether. But considering what I said, I think it's an especially exciting time for early stage Web3 and AI startups because of just the level of interest there is, right? There's plenty of early stage investors. They're investing actively right now, even though Series A and Series Bs are doing pretty, they're stagnant right now. Early stage investments are moving along just fine. But that level of proof that investors are looking for is a little bit different. I mean, I remember what it was like, fundraising in 2013, 2014, the golden age of startups. I was really young. I was just fortunate enough to have my brother, who's the founder of Grabber.io, kind of seeing him go through that struggle early on, 2013, 2014. And it's a completely different scene. I mean, the money was flying around left and right. Now it's a battle. It's difficult. And really, the pain point is pre-product. If you're early stage, if you're pre-product, it's showing that market fit, that pre-product market fit, that pre-product revenue, beat grants. I'm gonna say grants is a little bit of a difficult thing to like pinpoint that's revenue, but there's a lot of things you can do with that in a PR sense of things, for sure. Like there's a lot of spins, like the way you can spin it and so many things you can do with that, but it's proving your early stage market fit before you even get to that product if you're super early stage.
All right, thank you, Arkadiy. And everyone, we have Tyler Roessel with us today, who is an advisor and business developer. Thank you so much, Tyler, for joining, and welcome.
Yeah, sorry. Thank you very much for having me today. It's a pleasure, and I apologize as well to the panelists and to yourself as well for running a little bit late today. But pleasure to be here and looking forward to the conversation.
No worries. Thank you so much. We just started, and let's hear Alberto now. Alberto, please share your opinion.
Well, I pretty agree with most of what have been said. What I would add is also what is interesting and what I experiment with a startup I'm advising specifically in Italy is that if from one side it could be a little bit more tricky to fundraise, on the other side it's also becoming possible to get an early acquisition, obviously, if that is the goal, because in many cases we had companies that are looking for a kind of technology or a kind of a market is connected to the AI space and so on, that maybe they weren't covering, and right now they are feeling much more the urgency of covering that kind of area because it's like cutting edge, it's something that is hyper hyped and so on. So the landscape has changed. It's not really easy to fundraise, but at the same time, there are different kind of opportunities that came out maybe late previously. They weren't available. And at the same time, the other thing that is pretty interesting is the speed at which the market is evolving, because literally with a new release by any kind of technology, it's opening the space for new startups to release new products and new features and so on. And that's something also VCs are knowing. So always the point is that, okay, I'm investing in this, but what comes next, which is the kind of certainty that we have in this kind of market, is evolving literally so fast. So it's a double phase, but I think that with the right approach, it's literally the best time to be into this space.
Yeah, okay, that makes sense. And my next question, what do you think, what are the key factors that attract investors to AI and blockchain startups in the Web3? And I would like to hear Tyler's opinion about it.
Yeah, and I think, there's quite a few factors that are going into it. I think right now, in particular, I think to somewhat separate AI and blockchain, I think within AI right now it's quite relatively new to a lot of people and for a lot of investors. Similar to like when Web3 and blockchain came out, there were so many new ideas that came out very quickly. And a lot of those projects raised a lot of money I think you'll see very similar aspects within AI as well, just because there are so many different things that you are able to do with it. So I think with that said, there is quite a bit of money going around with it right now, but I still think it's really just the tip of the iceberg, and that there will be so much more that will come into it within 2024 and then going into 2025 as people really start to understand the full spectrum of actually what it can provide. I don't think we even really know yet. Obviously, I think from a general perception, the public only knows it from Bard and from ChatGPT, and then now with Grok coming out with Twitter. But when we start looking into what generative AI can do and people really dive deep into that, I think, investors will start to also understand. I don't think investors fully understand yet what's actually going on with AI and what the applications can be. I think, some of what you're somewhat is exciting to see is what ChatGPT has done with their new store. And I know not everyone has access to that, but how people start to develop with that and really starting to build on their own. I think you'll find a lot more founders in 2024. There'll be individuals, be one or two people that know how to code and understand what AI can produce. I think that's where you'll see a lot of the development and new startups coming from and really fitting into niche markets as well. It won't just be about using ChatGPT to change content or, review what's on the websites, but it'll be really diving deeper to solve real world issues.
All right. Josh, do you agree with that?
So in large extent, I do. I do think that there are opportunities to be had in AI regardless. I think that one of the primary drivers currently in the investment side is what I hear quite regularly from clients in the startup space of, in other types of startups, they're looking at a return on investment of 10 years, maybe longer. And in the AI space, blockchain space, investors are looking at investment, return on investment, and profitability of their investment in as little as 24 months, sometimes even less. And while that may not be, particularly feasible in like the grand scheme of things, particularly for, sustainability and sustainable companies, and not even getting into like ESG, but just like sustainable in terms of financing. It's kind of interesting that the people that I hear talking about investment right now, what they're really trying to do is turn their dollar over as fast as possible.
I think if I may chime in here, I think that's an interesting question as well, as like, how do you look at profitability between blockchain and Web3 as opposed to AI? Because I believe the models are, quite different. I think especially if you're talking about AI from a business corporation standpoint or from a consumer standpoint, in a subscription model, you would almost think it'd be faster to make profitability within AI faster than you would potentially in blockchain or Web3. I'm not sure what your perspective on is that, Joshua, but
as an attorney, I have very little perspective. I'm just doing documents. But I do hear, that question
it's
among
interesting.
investors. And so, I'm cognizant of the question, but I'm not particularly, have a viewpoint as to what's better. It's more like I hear the words and I say, that's interesting from a point of view of like sustainable investment of, if you're expecting, doubling your income every year, that may not be sustainable. And that's just looking at the history of the world, right?
Okay, Arkadiy, do you have something to add?
I mean, I definitely agree with everything that has been said. It's it is so. Everything is so. What's hot right now, I think infrastructure stuff. That's the big bet right now. I mean, that's what we are seeing with OpenAI and everything that's going on with them on the corporate end of things. The store launching, we see how many cool stuff developers can actually build on top of OpenAI. So I think the last couple of weeks have been dedicated to this realization that this is really about the infrastructure play over anything else. So investors are going to be prioritizing infrastructure-based startups over if we're talking about AI. I think the same applies to blockchain and Web3 stuff. Investors do generally prefer infrastructure play. It's easier to prove market fit. It's easier to prove your customer base, and so on and so on. I think that's really the biggest takeaway I could share.
Alberto?
Well, I would add that there is a big difference when it comes to AI, Web3, and the rest of the market, especially when it comes to Web3. Web3 has its own cycles that so far has been following the halving cycle. So obviously when it comes to fundraise for startup that is blockchain related, one story is fundraise like right now or the previous year. Another story we hope that it will be 2024, 2025 when the market will start hoping again to heat up, especially because when it comes to horizontal VCs, family offices and so on, they got scared after the FTX crashed, and in that moment the market changed completely. For example, at that time I was collaborating with it is still an accelerator horizontal, so it's not specialized in any kind of niche. And then before the FTX crash, they were so excited to have someone, because I'm mainly focused on Web3 blockchain related things, and they were so excited to embrace that niche. But after the FTX crash, that's something that literally changed just in a matter of hours. From that moment on, they stopped. And in a certain way, that's something that I almost feel sorry, because at the end of the story, the best time to start pushing, to having money to build something, it is during a bear market, because we don't have to deliver. We have time to be focused on delivering a great product when it will be the time to monetize it. Unfortunately, when it comes to Web3, this is not the case. You need to make enough money during the bull run in order to survive when the market will go down. So right now, the whole challenge for everyone who is approaching the fundraising market when it comes to Web3 is to be ready for the moment when retailers' hype will come back into the market, to start fundraising with vertical VCs. That's something that is already happening, even if we hope to speed up a little bit the process. But specifically when the horizontal ones will start to think about maybe, and that's the hope right now, that more chat about real world asset. We are seeing T-bills tokenized on chain. We are seeing much more going on into real case, real value that can benefit corporation, institution, and so on. So it's not just about speculation. Blockchain, I think that it doesn't have any more to prove that it can deliver value. It is much more keep going on with the evolution, with the kind of building that is happening, but a kind of demonstration, a kind of turn-off moment already happened. Right now, it's much more about onboarding new institutions, more money, and so on. Unfortunately, it takes time, and literally, a bull run will happen, because when it comes to crypto market, the market change in that moment, no matter what you do.
If I may quickly chime in, I think Alberto has pinpointed a really specific thing here, and it's crucial. But I disagree with you in one regard. I think bear market is not a great time to build, because everything you're building, you want to make sure there's people using it. You want to make sure you're getting live feedback 24/7. You're ultimately building something for someone. And what we're seeing happening today, and what I've been seeing with a bunch of Web3 startups for the last year and a half, maybe 2 years of the whole bear market thing going on, is people dedicating resources and time to building things that people just don't need and are not going to use. And once they launch, they figure out that there's no market fit, there's no product, there's no market for them. They shut down, and that's spent time and spent resources. I think it's just not a good strategy. What I think is happening right now with Web3 is enterprise adoption. I think that's what you need to focus on if you're working in Web3 right now and you're trying to raise money. The first question you should be asking yourself, how can I onboard my next small to medium sized enterprise or a large enterprise? That should be your goal. Once you have once you have that pinpointed, that pilot with enterprise discussion will eventually turn into an investment possibility, a fundraising possibility. You should strive to close your enterprise partners right now, because it's the time to prove what you've managed to build, and then the money will come, then the fundraising will come. You have to prove your early stage product fit, market fit. Without this, you're doomed. Like, nobody's interested in R&D plays. That's not going to play unless you're OpenAI and you have billions of dollars from Microsoft.
I'm not fully agree with what you say, because honestly, it depends who is your customer. I mean, according to who is the target you want to work with, according to what you want to develop, and according to how long does it take, obviously, you can need money in a certain moment or in another one. When it comes to a bull run, the main difference is that you have onboarded many retailers, and also the kind of feedback that you will receive, it will always be biased by the fact that everyone is earning so much money, and it's not going to work. Also, if you think about it, most of the projects are dying during the bear market, or the one who will be successful, the next bull run will be the project that raised money just at the end of the previous bull run and had the time to develop during the time. Another thing that is crucial when it comes to Web3 is that it's quite impressive how low level of professionalism is there into this industry. Most of the people, this industry has been made by tech people, great developers, great people, great minds, but no expertise when it comes to marketing, no expertise when it comes to business side. And that's something that is pretty embarrassing, because I'm a content creator, but I have been working 15 years in the startup field. I had a marketing agency. I work as a professor at university, teaching marketing and business. And what I have been impressed when I came into the Web3 space and happened full time in the last 3 years is that the level of that you are working into this industry is pretty low. So the main goal is literally what we need is to start onboarding people that are having skills, not just for developers. Most of the people, when they talk, most of VCs, they are mainly talking about developers. We need more developers and so on. As you said, product market fit is something that will come out from business minds more than developers, because developers can only develop, unfortunately, or fortunately, because obviously everyone can bring value in a certain kind of niche. There is not anymore space for a one-man show. So we need different kind of competencies that all together can create more value. So the main point is having time, and maybe the bear market could be too long, so maybe you can just not have feedback, but it's not also true, because it depends literally who is the market, who is your target, who is the market, what do you want to do, what's the level of your expertise. Obviously, if you're just a developer who is raising money during a bear market and you are start fantasizing about something that will never going to happen because you have built something cool from the tech point of view, I fully agree with you. That's a big limitation, and that's absolutely true. But
I'm going to shut up in a second, because I don't want to take any more time from any other speakers, but I want to disagree with you on this point. I think Web3 is doing much more than many other industries for pushing the boundaries of marketing and pushing the boundaries of business thought and pushing the boundaries of sales. I think Web3 is doing some of the most incredible things, and the biggest, think Starbucks with Odyssey, think loyalty programs being re-envisioned, think new engagement with brands. The things that I see startups doing in Web3 on exactly that front, marketing front, kind of PR engagement front, content creation front, is through the roof. I think it's so creative.
So I actually think that both of you are right. And I think you're actually agreeing from different points of view, right? The marketing side of this is fantastic. It's unfortunate that many of the marketers aren't talking to developers, and vice versa. On the development side, there's a developer hubris in Web of I know best because I'm the smartest guy in the room. And sadly, many times that person is a very smart person, but they also lack that EQ, that emotional quotient of saying, how do I talk to real humans? They're very good at talking to machines, but they lack any ability to speak human. And I don't care what language that is, right? It's a developer mentality of, I'm very good at typing on keys, but I may not be able to have a conversation with the guy next to me. And that's not to say that all of them are that way. There's always exceptions to the rule on both sides. But what we're missing here as a industry is something to tie the developers to the marketing side and vice versa. And I absolutely think that, you're seeing very cool things built during the bear market by developers hanging out in their basement saying how cool this is, but they're not talking to the marketing arm with a real conversation of saying, does anybody else think this is cool? I know I'll use it in my basement, but does anybody else in the world think that this thing that I'm doing is awesome? Because if nobody else thinks it's awesome, regardless of how technologically, enabled and how much of a savant the developer is, it will live on forever in their basement.
Yeah.